Hello students, welcome back. This is Mrs. Mercado speaking, and this particular lecture is going to cover Chapter 2, which deals with analyzing transactions. Now this is a super important chapter because in this chapter, students get introduced to what assets, liabilities, owner's equity, revenue, and expense accounts are, the normal balances of each account, how to journalize entries in a general journal, how to post the information from the journal to the ledger, how to prepare a trial balance. There is a lot of information in this chapter that needs to be learned. Okay? Now, please do not start working on your assignments until you have read Chapter 2 in its entirety. Okay? In accounting, you must learn you must understand Chapter 2 to be able to move on to Chapter 3, 4, 5, and 6. They're cumulative. You need to be able to understand the concepts and have a good understanding because every week that we cover a different chapter, it's just adding to what you previously have already learned. Okay, so it's very important. This is a super important chapter. Please ensure that you read it. Okay, now this is Accounting 2401. This is Principles of Financial Accounting, and the textbook that we are using is Financial and Managerial Accounting, 15th edition. Okay, now you have several problems for homework. I'm not going to go over all of them because they can be time consuming. Remember, in accounting, it's not about me lecturing about theories and stuff like that. In accounting is more application based, more hands-on. Okay, so the only way for you to learn how to do accounting is by actually doing it. Okay, so that's why I give homework every week, not to keep you busy, but so you can apply what you've learned in the chapter to real world scenarios of what you actually are going to do out there when you're performing accounting tasks. Okay, so now you have several problems that you're going to be completing on your homework. Each of the problems, you can use your book. There's videos embedded within your homework assignment that they're short videos that provide you like a high-level overview of what you need to do. There's examples in your textbook. Now, what I did for this particular chapter is I gave you a pretty comprehensive problem that covers everything in the chapter. Okay, so it's a little bit about journalizing transactions. It's a little bit about posting transactions from your journal to your ledger, and last but not least, it's about performing a trial balance and then doing some analysis on that information that you just put together. Okay, I am going to go over that comprehensive problem. That way you have an understanding of how everything flows. Okay, everything from Chapter 2. Okay, the other exercises, if you can follow this problem, you can do all of your other homework problems because the other homework problems are bits and pieces of what I'm going to do right now for you. Okay, so the first couple of exercises are just getting you into the rhythm of how to analyze transactions, how to post them into the journal, how to post them into the ledger, how to do your trial balance, a little bit of everything in short scenarios. The problem is a long scenario where you have to put everything together, and that is what I'm going to cover with you. Okay, now in accounting or in my classes per se, because every teacher has their own instructional method, and I respect that, but me personally, I don't expect students to memorize a lot of information. Okay, your assignments are open notes, open book. Your tests are open notes, open book. Why? Because in accounting, you'll get to do the things that you do most often, like journalize transactions, prepare financial statements every single day. By the time you know it, you're going to have those memorized. You're going to learn them by heart. Why? Because you do them so much. Okay? If you understand what I'm doing, you can follow along, then you'll be fine. Okay? I'm not going to drill you as to you need to memorize this and that. No. You know what? I don't have a lot of stuff memorized. I know where to find it, and I know what to do with the information once I find it. Okay? That is all you need to learn. Okay? When you're out there working, your boss is not going to say, well, you can't Google it, or you can't get your textbook out and look at it. All they want is for you to do a balance sheet. Okay? So you need to figure out how to do a balance sheet and present it to them. Okay? So you can use your book, you can use Google, you can use whatever if you don't know how to do it. I hope that by then you know how to do a balance sheet. But if you need a refresher, you can always go and look up some examples on Google and, oh, okay, now I'm doing it right. This is what should be included. I'm doing good. Kind of like to confirm that you're doing it. So that's kind of like the approach that I take. Okay? You do need to be able to complete certain stuff for me, which is what the items that are going to be on your test. And by that time, you've already practiced your homework. and you'll be ready for when the test comes. You can be able to do it and tackle it. Okay. Now, I do not ask students to memorize a lot of things, but what you have on your screen right now is super critical, super important. You need to know the type of accounts that there are and the rules of debits and credits for each of those accounts. You need to know what is the normal balance for each of your accounts. Now, the normal balance is the account, or it's the balance that each account should have normally, okay? So, let's say, for example, assets. What is an example of an asset? Okay, an asset is anything that you own, okay? So, assets are anything that belong to the company, okay? So, the biggest asset most of the time is your cash, right? So, we have cash. The normal balance of your cash account should always be a debit. Remember, the normal balances are the ones in green, okay? So, cash is an asset. So, cash is an account that falls under assets. And then anytime you do a transaction that increases your cash, you're going to debit. Anytime that you have a transaction that decreases your cash, you're going to credit, okay? Let's say you have office equipment. Okay? Office equipment belongs to you. Okay? Anytime you buy office equipment, you debit. Anytime you sell or get rid of office equipment, you credit. Okay? Liabilities are anything that you owe. Okay? This is the money that you owe to your creditors, you owe to the bank, whoever. Okay? So anytime that you buy something on account that you're going to pay at a later point in time, you're going to credit the account. Okay, so liabilities have a normal balance of a credit. Okay, so when you buy something on account, your liabilities go up. You owe more money, you credit it. When you make a payment, the liabilities goes down, so then you need to debit. Okay, under stockholders equity, we have a variety of items. Okay, so stockholders equity is basically the right to the assets of the business. Okay. Here, under stockholders equity, we have various categories. The first one we have is common stock. Okay, so anytime that you issue common stock, you're going to credit it. Okay, and then if you buy back the stock, you debit. Okay, here we have retained earnings. The normal balance is a credit. If there's a decrease, you debit it. Okay, dividends, normal balance is a debit. And if it decreases, you credit it. So it's basically a map. Okay, that's what it is. This is what I treat it as a map. Excuse me. First, you identify where does my account fall under. Okay, is it a dividend? Is it an expense account? Is it a retained earnings? Is it an asset? Okay, and then you ask yourself, okay, first I identify the account. Okay, I've got that identified. Now I need to figure out is a particular account going up or down? And depending if it's going up or down is whether you debit or credit. So this is a map. Okay. So just know that assets should have a debit balance. Liability should always have a credit balance. Common stock should always have a credit balance. Retained earnings should always have a credit balance. Dividends should always have a debit balance. Revenue accounts should have a credit balance, and expense accounts should have a debit balance. Now you will have transactions posted on the opposite side depending on what the transaction is. But normally the transaction should be hitting the normal balance of the accounts. I recommend that you print out this map and you have it handy all the time next to you when you're doing your transactions. Okay? Because it's going to help you identify whether you need to debit or credit an account. Excuse me. So, I am going to go over the longest problem in your homework. Okay? But why did I choose this problem? I chose this problem because it's going to give you a little bit of everything. Okay? And that way you get to understand what we're doing. So here we have journal entries and trial balance. So it says, on November the 1st, Lexi Martin established an interior decorating business. So we have a brand new business being established on November the 1st. Okay? During the month, Lexi completed the following transactions related to the business. Okay? And then we have transactions from November the 5th all the way through November the 24th. Okay? These are going to go on page 1 of your journal. These are the first transactions that we're going to be entering. And then we have additional transactions, and they're telling you that these transactions go to page 2 of your journal. Okay? So we have 2 journal page numbers. Instructions. the first thing that we have to do is we're going to have to journalize each transaction on a 2-column journal on page 1, referring to the following chart of accounts and selecting the accounts to be debited and credited. Do not insert account numbers in the journal at this time. Explanations may be omitted. So we're going to tackle part 1 first, and then we'll move on. Okay? I don't want to overload you with information. So the first thing that they're asking us to do is to journalize all of these transactions into page 1 and page 2 of your journal. And you only get to use these accounts provided. Okay? You can't make up accounts. The accounts have to be what they provide. Okay? So let's get started. November the 1st. Okay? So they already got November identified. I'm going to put November the 1st right there. Okay? It says Lexi transferred cash from a personal bank account to an account to be used for the business in exchange for common stock, $50,000. So Lexi is opening up a brand new business. Okay, whenever we open up our new business, we have to keep our finances for the business separate than our personal finances. They can't be together. So what happened here is Lexi took money out of her personal account and she opened up a brand new checking account, an account for the business. Okay, and she put $50,000 in there. Okay, now she is an owner of the business, so she issued to herself $50,000 worth of common stock. So what did she do? She gave $50,000 to the business. What did the business do? The business gave her $50,000 of common stock. Okay, so now she has ownership rights of the business. So now we have to record that transaction. What happened? Well, we need to identify what happened to the business. Well, the business received $50,000 of cash from Lexi. Okay, so now we have $50,000 in the bank. So what's going to happen? Well, my cash is going to increase. Okay, so when your cash increases, I need to debit. Cash is an asset, so my cash is going up by increasing. I need to debit cash, right? So we're going to debit cash, $50,000. Okay? Let me make this a little bit bigger. There we go. Okay. Now, what else happened? Well, it says here that she gave $50,000 in exchange for common stock. So let's look at common stock. Okay? So, what happened? Well, now we issued common stock, so there's common stock out there. So my common stock increased. Okay? So when my common stock increases, I credit common stock. Okay? So my common stock is going to be credited. Okay? Now, whenever you're posting transactions in a journal, the debits will always go first, the credits will follow. Okay? Debits must always equal credits. Okay? The debit is flushed to the left. The credit it's a little bit indented, so we can differentiate between both of them. Okay? So those are just 3 things to always look at. Debits always go first. Debits and credits need to equal, and then the credit is indented. The debit is flushed to the left. Okay? Okay. On November the 1st, okay, we have another transaction. It says here that you paid rent for the period of November the 1st to the end of the month, $4,000. So you paid your rent. Okay? So, remember, we need to use these accounts right here. So what did you pay? Well, you paid your rent. So we're going to use the account called rent expense. Okay? And my rent was $4,000. How do you pay your rent? Okay, I don't know about you, but I have a mortgage, and when I pay my mortgage, I pay it with cash. When you pay your rent or your mortgage, you usually do it with cash. So, cash is going to decrease, okay? Because cash decreases, you would credit it, okay? So, cash decreases, so you're going to credit it. So, cash is being decreased, you're going to credit it. And then you are paying your rent. Any kind of payment that you have for your utilities, your rent, anything related to the business is an expense account. Okay, the normal balance of an expense account is a debit. So every time you have an expense for something related to the rent, the utilities, miscellaneous expenses, anything of that nature, salaries expense, anything like that, it will be a debit. Okay, so that happened on the 1st. On the 6th, you purchased office equipment on account, $15,000. What does that mean? That means that you bought office equipment and you're going to pay at a later point in time. Okay? You're not going to pay right now, you're going to pay next month. Okay? So you owe someone money. Okay? So, the first thing that we do, what happened? Well, we bought office equipment. Do we have more or less office equipment? Well, if you bought it, you have more office equipment. Okay? Office equipment is an asset. Okay? So if I have more office equipment, then I'm going to debit my account. Okay? So office equipment increased, and this office equipment was $15,000. Okay? How did you pay for your office equipment? On account. Okay? Anytime you see the word on account, it means you owe someone money. When you owe someone money, it's a liability. Okay? The account that we usually use for when we purchase something on account, it's called accounts payable. So, because your liabilities are increasing, then I need to credit my account. Okay? So we look at the list of accounts that we have here, and they're organized. The ones, anything that starts with a 1 is an asset. Anything that starts with a 2 is a liability. 3 is stockholders. 4 is revenue. 5s are expenses. Okay? So that's how they're categorized. So my 2s are my liabilities. So you bought something on account, we're going to use accounts payable. Okay? Accounts payable for $15,000. Okay? Then what else happened? On the 8th, you purchased a truck for $38,500. You paid $5,000 cash, and you're gonna pay the rest in payments. That's what's gonna happen. So you bought a truck. Okay, this is a little bit tricky because it includes 3 accounts. So the first thing is what did you buy? Well, you bought a truck. Do we have an account for a truck? Yes, we do. What did you buy? You bought a truck. So I'm gonna go ahead and I'm gonna debit my truck. How much did you pay for your truck? Well, I paid for my truck $38,500. Okay. How did you pay for this truck? Well, the problem says that you paid cash of how much? $5,000. You paid $5,000 in cash. Okay. So, you paid $5,000 in cash. So let's get the calculator out. So the truck cost me $38,500. I'm going to subtract the $5,000 that you paid with cash. So that means that you owe $33,500. Okay? That is how much you have left, okay, to pay. Now, let's read carefully what it says, okay? You purchased the truck for $38,500, you paid $5,000 in cash, and you gave a note payable for the remainder. So let's look at our accounts. We've got notes payable here, okay? So the difference between notes payable and accounts payable is usually accounts payable is paid maybe within 30 to 60 days. It's a short-term loan, okay? You're going to pay fast. And notes payable, that's more structured. That means, you know what, every month for this truck, you're going to make a payment of $1,000. On the 15th of every month, you're going to make a $1,000 payment, okay? You have a commitment, you have a contract to make that payment on a specific period of time. That's why it's a note. You actually had to sign a document, okay? So, I'm going to go ahead and I'm going to have my notes payable here for the difference. And the difference we had calculated was $33,500. Okay? So that happened on the 8th. On the 10th, you purchased supplies for cash, $1,750. Okay? On the 10th. So what did you buy? Well, I bought supplies. So that means I have more supplies. So supplies increases. So you're going to look at your thing over here at your map. Supplies is an asset. I have more supplies, so that means I need to debit my account. How did you pay for the supplies? With cash. Cash is an asset, so that means I have to credit my account for cash because it's decreasing. Okay, that's how you read this thing. Okay, so on the 10th, you bought supplies for $1,750. And then, how did you pay for those supplies? According to the problem, you paid with cash of $1,750. Okay. On the 12th, You received cash for job completed, $11,500. So you performed a job and you got paid cash. Okay, they paid you right there and then. That's awesome. Okay, so on the 12th, you performed some type of a job and they paid you $11,500. Well, what happened? Well, the customer paid you $11,500. So now you have money. Now your cash increased. Okay, so if your cash goes up, you debit. Okay, cash increases, you debit it. Okay, so cash increases and the amount of cash was $11,500. And I'm getting this from the 12. I'm looking at the 12 right here. Okay, well, why did you receive $11,500? Well, you performed a service of some kind. Okay, so we need to go look and find our revenue accounts. Our revenue accounts will always start with a 4. Okay, and we only have one revenue account, which is called fees earned. Okay, so if we look at our revenue accounts are right here. Okay, if you generate revenue, you generated revenue in this case because you performed a service. You generated money. That's going to be an increase. You're going to credit the revenue account. Credit the revenue account. So my revenue account is fees earned for $11,500. Okay. On the 23rd, you recorded jobs completed on account and sent invoices to customers, $22,300. Oh, I'm sorry. I skipped one. I skipped the 15th. Let me go back. So on the 15th, you paid annual premiums on property and casualty insurance, $2,400. So you paid for insurance on the property, $2,400 for the whole year. Okay. Okay. So what happened here on the 15th? You paid for insurance that's going to cover the whole year, annual premiums. So let's look at our accounts and let's see which ones talk about insurance. Okay. So we have prepaid insurance. That's when you paid for insurance in advance, which is what we did. We paid insurance for the future year. Okay. And we have, that's about the only thing that we have in insurance. So that's what we're going to use. Okay. Now in real life, you're going to have two accounts. You're going to have prepaid insurance and you're going to have insurance expense. Okay. Now that's going to be covered, I believe, next chapter which we deal with adjustments. So I'm not going to confuse you right now. But in this problem, we're looking at prepaid insurance. It's prepaid because you paid it today and you've paid for insurance for the whole upcoming year. So you've prepaid something, okay? So we're going to use that account. Now, a prepaid, if you notice, it starts with a 1. It's an asset, okay? So if we look, prepaid is a 1. It's an asset. So then that means that my prepaid increases. So I'm going to debit my prepaid. So I'm going to debit prepaid insurance of $2,400. How did you pay for your insurance? I paid with it with cash. Okay. And when did this happen? Sorry, I put it in the wrong column. You see how we make mistakes? Here we go. I was like, I thought I had entered the date. Okay, so we have prepaid insurance, and how did we pay it? We paid it with cash. Okay. And the amount of the 15th transaction was $2,400. Remember, as you're doing your journal entries, debits must always equal credits. Okay. On the 23rd, you recorded jobs completed on account and you sent invoices to customers. Okay, $22,300. So what does that mean? That means that you went out there, you performed some kind of a service, you did a job, you invoiced the customers, but they haven't paid you. Okay, so you've done the job, but you haven't gotten paid for it. Okay, 23. So whenever you perform a job or you do a service and the customer hasn't paid you, they're going to pay you at a later point in time. We always use an account called accounts receivable. That means that we're going to be receiving money at a future point in time. It starts with a 1, which means it's an asset. Okay, so accounts receivable is an asset account, and it means that someone is going to pay me money. They promise to pay me at a future point in time. So if your accounts receivable, which is your asset, increases, then you would debit the account. Okay? So let me go back up here. Accounts receivable. So you're saying, you know what, at a future point in time, I am going to collect, and the amount was $22,300. Okay. Now, what did you have to do to set up this receivable? Well, you had to perform a job, right, or several jobs. Okay. Every time you perform a job, you have to record your revenue, even if you have not gotten paid. Okay. It's part of the accrual principles of accounting. So regardless if you get paid or not, revenue needs to be recognized when it is earned. Okay. So in this case, we performed, or we did a job. The account that we use to record our jobs is fees earned. So anytime you see a 4, it's revenue account, so it's fees earned. Okay. So here we have fees earned for $22,300. Okay. The last item on our page 1 of our journal is you received an invoice for truck expenses to be paid November. Okay, $1,250. So you received an invoice, but you haven't paid it yet. Okay, you know you owe the money, but you haven't paid it yet. So you need to record that in your system. Well, what is that invoice for? Well, it says here it's for truck expenses. So I need to record my truck expense. We have an account for truck expense right there. So this is happening on the 24th. So I have truck expense, okay, and the amount for my truck expense is $1,250. Okay. Now, have I paid for this truck expense? No. It says that you got an invoice that needs to be paid in November, but you haven't paid it. So if you owe someone money, what account do you use? Okay. The account that we use when we owe someone money is accounts payable. Anytime you owe someone money, you use accounts payable. Okay? You use accounts payable if it's something where it's short term. In this case, we're going to be making payment for it in November, which is a couple of days from now. Okay? So that's short term. If it's long term, where we're going to be paying over a longer period of time, then we have a notes payable. Okay? So all of these are my transactions that go on page 1. Now I'm going to go to the transactions that need to go on page 2. Okay? Let me see if I can make this a little bit smaller so I can kind of I don't have to be scrolling back and forth. Okay? There we go. Thank you for your patience with me. There we go. Okay. So now we're going to go to the transactions on page 2. So November the 29th. You paid your utilities expense, $4,500. Okay. So we go to our account and we figure out, do we have anything for utilities? And yes, we do. We have utilities expense. Okay. Now utilities expense, all of these accounts that are expense accounts, if we look at our map over here, expense accounts will always be debited. Okay. So anytime you pay a bill, and it's an expense, you're gonna debit it. Okay. 99% of the time you're gonna debit it. There's times where adjustments need to be made, and we'll cover that in future chapters. If an adjustment needs to be made, maybe we would need to credit an expense account, but it's very rare. Most of the time, I would say 99% of the time, anytime you have an expense account, you're gonna be debiting it. Okay. So let's go ahead and go back. So we have, you paid your utilities expense. Okay, so we have utilities expense. Let me start typing here. So we have utilities expense of how much? Of $4,500. Okay. How do you pay your utilities at home? I know I pay my utilities with cash. Cash is going down, so therefore I need to credit my cash because cash is an asset account. Okay, so if it's a decrease, I credit it. Okay, so $4,500. Okay, on the 29th, you also paid a miscellaneous expense for $1,000. So do we have an account for miscellaneous? Yes, we do. We have miscellaneous expense. So all expense account entries are debited, and the amount is $1,000. How do you pay for your expenses? If it says paid, it means that you used cash. Okay. What happened? On the 30th, it says that you received cash from a customer on account, $9,000. So what does that mean? So you received cash. So do you have more or less cash? Because if you're receiving cash, you have more. So cash is going to increase because now you receive cash of $9,000. Okay. Now it says you receive cash from customers on account. If a customer owed you money, what account would you use? Okay. And I had already explained that. If someone owes you money, then you set up a receivable. Okay. So a receivable is debited. Okay. When you receive money, someone pays you the money that they owe, then you would need to credit it. Okay. So in this particular example, they're making a payment. It's not that they owe you money, they're paying you what they owe you. So I would need to decrease my accounts receivable balance by crediting it. Okay. So accounts receivable would be credited for $9,000. Okay. On the 30th, once again, let's see what happened. You paid wages of employees, $6,800. Okay. You paid your wages to your employees. Do we have anything for wages? Yes, we do. We have wages expense. Okay. Wages expense. Okay. We have wages expense of $6,800. Okay. How do you pay your wages? How do you pay your employees? Well, your employees get paid cash. Okay. Whether it be in a check format or an electronic funds transfer or direct deposit, what are they receiving? Money. Okay, so it's cash. Okay. The next thing we have, it says we paid our creditor a portion of the amount owed for equipment purchased on November the 6th, $3,000. So let's look at what happened on November the 6th. On November the 6th, we bought equipment for $15,000 on account. We're going to pay at a later point in time. So we owe $15,000. Now in this transaction, we are making a payment of $6,800 for that equipment that we bought for $15,000. So we're paying $6,800 worth. No, I'm sorry. We are paying, how much is it? Paid creditor, $3,000. So you're making a $3,000 payment of what you owed. So you owed $15,000 and now you're going to make a payment of $3,000. So when we recorded this transaction, we already recorded the office equipment. So we don't have to mess with this because it's already been recorded in our books. But what we did record was an accounts payable. So that showed us that I owed $15,000. So if I'm making a payment today of $3,000, what's going to happen to my accounts payable balance? Is it going to go up or is it going to go down? Well, I owed $15,000 and right now I'm making a payment of $3,000. That means that now I only owe $12,000. So my balance is going down. So if your liability, which is your accounts payable, your liability is decreasing, then you debit the account. Okay? So your liability, what you owe, is going down because you're making a payment. You're going to debit the account. Okay? So on the 30th, you paid a creditor a portion of the amount owed, $3,000 for the office equipment. Okay? So accounts payable gets debited. Okay? For the $3,000. How did you make a payment? Well, you make a payment with cash. Your cash goes down $3,000. So the reason I debited my accounts payable, remember, accounts payable is a liability, and my liability decreased. Now I used to owe $15,000. I just made a $3,000 payment, so my balance went down. It decreased. So that's why I debited. Okay? The last transaction we have on the 30th is you paid dividends of $2,500. pay dividends of $2,500. So let's go look at dividends. Okay, every time you pay out dividends, you will debit the dividends account. Okay, dividends account has a normal balance of a debit. So usually the only thing that happens is dividend distribution, dividend payments, we debit the account. Okay, so let's look here. Do we have an account for dividends? Yes, we do. We have account number 33 for dividends. So dividends gets debited. Dividends. There we go. And the amount that we paid on dividends was $2,500. How do you pay your dividends? How do you pay your stockholders? Well, you pay them with cash. Okay. $2,500. Okay. So that is the first part of the problem. Journalizing all of the transactions in your journal, page 1 and page 2. Now we're going to go to the part that is a little bit more challenging. Now we need to transfer all of these entries that we have in our journal, page 1 and page 2, from our journal into our ledger. Okay? So a general ledger, what it is, it's basically a summary by account. Every account has a general ledger. Okay? And what that ledger tells us, it basically gives us detailed information about all of the transactions that have posted to each account. Every account has an account number. So this is cash. Cash is account number 11. Okay? And then here you're going to post all of the transactions that got posted to your cash account in your journal. Okay? So every single account that you have will have a general ledger. Okay? One general ledger per account. Okay? And now we have to transfer all of this information into our ledgers. So it says, post the journal to a ledger of 4-column accounts, inserting appropriate posting references as each item is posted. Extend the balances to the appropriate balance column after each transaction is posted. Okay? So we have to transfer all of this information into our ledgers. Okay? The first ledger that I have, which is the one that has the most transactions, is cash. Now when I do accounting, I'm very old school. I did accounting for many years, and I am a visual learner. I need to have a piece of paper in front of me. I need to be highlighting. I need to be writing. That is just me. That's how I learn. That's how I am. I know most, technology has advanced, and nowadays, most students are very comfortable using a computer or using whatever is it that they do, their phone or whatever. I am old school. I am going to show you how I would do this problem if I'm using my computer, right? Whenever you do accounting, you want to make sure that you use all of the information. I like to highlight my information that has been used. That way I know, if it's been highlighted, that means I've used it somewhere, and I won't forget if it's been used or not used. So usually if I'm doing it in a piece of paper, I scratch it off or I highlight it, whatever the case might be. Okay? So the first account that we have is cash. So what we need to do is we need to go back to our journal, and we need to identify all of the accounts that have cash involved. Okay? And I'm going to highlight them in yellow. Okay? I'm going to be highlighting them in different colors. That way we can keep track of the information. And remember, we're highlighting only the accounts that affect cash. Okay? So I'm identifying all of my cash transactions, whether it be a debit or a credit, it doesn't matter. You need to find everything that has cash. Okay? And its corresponding amount. Okay? Whether it be a debit or a credit. And you have to be very careful when you transfer the information, because a lot of times students transfer the incorrect information to the ledger. Okay? So this is what I'm going to be doing. I'm going to be finding everything that impacts my cash account, and I'm going to highlight it. Okay? And this is just for me. So when I'm doing the information, I know what I'm doing. Okay? So I have this problem printed out in front of me. That way I don't have to be scrolling back and forth, because it does get tedious to be scrolling back and forth. I just like to type away. But I'm going to show you the logistics of it. Okay, so what's going to happen is you're going to transfer everything that I've highlighted in yellow into your ledger. They have to be transferred in date order. Whatever happened first, second, third, they need to follow sequential order. Okay, so you need to look for every transaction in a specific order and then transfer it just like it is down to your ledger. So the first transaction we have here happened on the 1st, and it's cash transaction, a debit for $50,000. Okay, so what I'm going to do here is I'm going to go ahead and I'm going to go to my cash. Okay, and this is happening November the 1st. Okay, under item, I'm going to leave it blank. The only thing that goes under item is either an adjustment, or closing entry, or a beginning balance. If it's any of those, you'll have something written here. If not, you'll leave this item column blank. Okay. Now, post reference. What is that? Well, the post reference is the account number. Okay. I'm sorry, the post reference on the general ledger will be the journal page number. Okay. So, this is where it gets a little bit confusing. On the post reference column for your ledger, you're going to put the journal. And the journal was journal 1. Okay. Now, once you do that, okay, and the amount of the transaction was, let's go back, was $50,000 debit. Okay. So I'm going to do a debit for $50,000. Okay. And then here on the last two columns, you have to keep a running total of your general ledger balance. So I have a debit balance. That's all I have. So that means that my balance as of November the 1st is $50,000 debit. Okay. Now, after I've done this, I need to go back to my journal 1 and I need to enter my account number, which is 11, in my journal. Okay. That tells me that I have posted this transaction on general ledger 11. I'm going to go to the next transaction, which also happened on the 1st. But in this case, cash got credited $4,000. Okay? So cash got credited $4,000. So you're going to enter the date, which is the 1st. This is journal 1. And now we have a credit of $4,000. Okay? So this is where it gets tricky. Okay? I'm going to put here a debit increases. A credit you deduct. Sorry, there we go. So, cash account, it's an asset account. Debits increase, that's the normal balance. Credits decrease. So, this is a transaction. All I did is I copied it from my journal. Now I need to calculate my ending balance. Okay, so we have to get our calculator out. Okay, so I had $50,000 in the bank. And now I need to subtract 4,000 minus 4,000. So that means I have $46,000 left in the bank. That is a positive number. So that means that your balance will be a debit, which is a positive. So I have $46,000. Okay. So a debit balance represents a positive balance. A credit balance represents a negative balance. If you overdraw your account, then you will have a negative balance. If you still have money in the bank, then you keep it in this debit column. Okay, just an updated balance. So it's $50,000 minus $4,000 gives you $46,000. Okay, so we continue. Now we've entered journal 1. Now I have to go back and I need to enter my account 11 on that entry right here. Okay. So that's been entered. Now I'm going to go down and I'm going to have another transaction on the 8th. On the 8th, cash got credited $5,000. Okay, cash got credited $5,000. So I'm going to do here on the 8th, that is journal 1, and I've got a credit of $5,000. Okay, so what's going to happen? I need to subtract. So my balance was $46,000. And I'm going to subtract, because it's a credit, I'm going to subtract 5,000. So my balance is 41,000. It's still positive, so that means I still have a debit balance of 41,000. Okay. Now I need to go back and I need to enter my account number 11 to that journal entry right here. Okay. And don't forget to do that, because if not, points will be deducted. Okay. The next transaction we have is on the 10th. On the 10th, we have cash, and it's a credit of $17.50. Okay. On the 10th, we've got journal 1, and we've got cash being, it was a credit of $17.50. So we enter it on the credit column, and that means it needs to get subtracted. Okay. So I've got 41,000 minus $17.50. That's going to give me $39,250. And that continues to be a debit balance. Okay. Sorry about that. So we go back and we enter the account number right here, account number 11. The next transaction we have is on the 12th. On the 12th, cash got debited $11,500. So now this is a debit on the 12th. Okay. So on the 12th, it's still journal 1. Cash got debited for $11,500. So if you notice, if you debit, you add. Okay. So I'm going to get my calculator. So I had $39,250 as my balance over here, and I'm going to add $11,500. That's going to give me $50,750. It's a positive, so I'm going to put it right there. $50,750. So at any point in time, what this general ledger does, it tells me how much cash I have on my account. Okay. Now I need to go back and I need to enter my account number 11 on my journal. Okay. Okay. The next one we have is on the 15th, cash. We have a credit of $2,400. Okay. So that is happening on the 15th. And we had a credit of $2,400. Because it's a credit, we need to subtract. So I'm going to go ahead and I'm going to do $50,750 minus $2,400. That gives me $48,350. Okay. Okay. So then we go back and we enter our account here. So those are all of my cash transactions for page number 1. Okay. Now I'm going to go on to page number 2. Okay. So on page number 2, I've got on the 29th $4,500 credit to cash. Okay. So this is happening on the 29th. This is journal 2. Okay. And I've got a credit for $4,500. Okay. Because it's a credit, I am going to subtract. So $48,350 minus $4,500, that's $43,850. Okay. What else happened? On the 29th, you've got another cash for 1,000 credits. Remember, we have to go back over here and enter the account number. Okay. So now we have cash, 1,000 credit. Okay. So this is happening on the 29th as well. This is journal 2. And we have $1,000. So we subtract $43,850 minus 1,000. That'll be $42,850. Okay. Then we go to the next one. We're going to go and enter the 11 here. So we know we've entered it in our ledger. The next one we have is we have cash being debited $9,000. So cash on the 30th gets debited $9,000. Okay. So on the 30th, this is journal 2. Cash gets debited $9,000. So whenever we have a debit, it increases. So I'm going to go ahead and I'm going to get my calculator. It'll be $42,850 plus $9,000. That'll be $51,850. That's my new balance. And then I go back over here and I enter my account number. Remember, the account number goes on your journal. The journal number goes on your ledger. Okay. Next, we have on the 30th, cash, a credit of $6,800. So on the 30th, this is journal 2. And we have a credit of $6,800. Because it's a credit, I'm going to minus. Depending on the type of account it is, it's going to vary if you add or subtract. But assets, you add your debits, you subtract your credits. Okay? So it'll be $51,850 minus $6,800. That'll be $45,050. Okay? On the 30th, okay, we have journal 2. We need to go back over here and enter our account number. Okay. We have another credit of $3,000 to cash. Cash, $3,000. Okay. And it's $3,000 here. So let's get our calculator. 45,050 minus 3,000. That'll be 42,050. And then we have on the 30th, the last transaction. Okay. Cash of $2,500. Okay. So this is journal 2. And that's $2,500. So we're going to subtract 42,050 minus 2,500. That's going to be 39,550. Okay. And then I go back and I enter my account number right there. Okay. So everything in yellow has been entered into my ledger. Okay. Now, what does this tell me? This tells me all of my transactions that happened during the month of November for cash. So I started off with 50,000. I ended up with 39,550. And my balance is always on the debit column because it's positive. If you were to go into a negative number, then you bring it into a negative, which is very bad because that means you overdrew your cash account. Okay, you don't want to do that. Most of the time, the balance will always be on the debit column. You just need to add your debits, you subtract your credits, and this is for your asset accounts. Okay. The next account we have is accounts receivable. Accounts receivable is account 12. So we have to go and we have to look for everything that says accounts receivable. Okay. So I'm going to color code that another color. I'm going to use maybe a blue. So we have accounts receivable there. And then we need to look for another one. And we have accounts receivable here. So for accounts receivable, we have 2 transactions. Okay. One on page 1 and one on page 2. Okay. So we're going to enter that information over into our second ledger. So the first transaction that we had happened on November the 23rd. We're going to leave the item blank. And that happened on journal page 1. And we had a debit of $22,300. Therefore, that's what my balance is going to be. Then I'm going to go back and I'm going to enter my account number 12 right here to show me that I've already posted it into my ledger. The next transaction we have is accounts receivable, and I have a credit of $9,000. Okay. So that happened on the 30th. So this is happening on journal 2, and I've got a credit of $9,000. Okay. So this applies the same thing because this accounts receivable is an asset. Okay. So debit increases, credit decreases. Okay. So this is where it's very important to look at your map to see what goes up and what goes down. Okay. Okay. So now I've got, let me get my calculator. So I had a debit balance of $22,300. Now I'm going to subtract minus 9,000. That's going to give me 13,300. So that is my ending balance for accounts receivable. What is accounts receivable? This is the money that people owe you, the company. Okay? You need to make sure that you collect this money as soon as possible. That is money that you've worked for and that you're pending for someone else to pay you. Okay? Now I'm going to go back and I'm going to enter the account number 12 right here just to make sure that I recorded the transaction. Okay? And that is what transferring information from your journal to your ledger is all about. Just looking for the information on the journal and then transferring it over to your ledger. The next account that we have is supplies, which is also an asset. Okay, so let's look and find the supplies, and that happened right here. We only have one supplies account for $17.50. That's all we have. We only had one transaction posted to supplies. That was on the 10th, and I have a debit of $17.50. Okay, so let's put that information under supplies. That happened on the 10th. That happened on Journal 1. And we had a debit of $17.50. So that's what my balance is going to be. Now I'm going to go back into my journal and I'm going to put account number 13. Okay, account number 13 right there. Okay, to show me that I've posted it. Okay. Okay, what account do I have next? I have prepaid insurance. So I need to go look for my prepaid insurance. And my prepaid insurance is right here. I only had one account to prepaid insurance. And that account is right there on the 15th. Okay, for $2,400 debit. Okay, so let's go back and let's go fill that out. Prepaid insurance. That happened on the 15th, and that happened on Journal 1, okay? And it was a debit for $2,400, okay? So I only have one transaction. That's what my balance is going to be, a debit of $2,400, okay? Okay, so now I can go back and I can enter my account number, which is 14, on my journal, okay? Right there. And I'm going to highlight it to make sure that I've used it. Okay. So the next account that I have is equipment. Okay. So let's go look for our equipment entry. And my equipment happened right here. And it was just office equipment or equipment? It was just equipment. So let me change this to equipment. It was just equipment. Remember, we need to only use what they provide us here. And it's equipment. I made a mistake. I fixed it now. Okay. So equipment, I'm going to highlight it another color. Equipment for $15,000. Okay. We only have one equipment account for $15,000. And the equipment, that happened on the 6th. That happened on journal page 1. And the amount of my equipment was $15,000. So we just transfer the balance over to my debit side of my balance columns. These two are your running balances. Okay. Okay. And then I'm going to go back to my journal and I'm going to enter account number 16 for my entry for equipment. Okay, right here I'm going to enter a 16. Okay, there we go. The next one we have is which one? We have a truck. Okay, so we need to go look for a truck. Okay, when did we have a truck? So the truck happened on right here on the 8th. Okay, so there's my truck for $38,500, and we only had one entry for the truck, and that happened on the 8th. Okay, so my truck happened on November the 8th. That happened on journal page 1. Okay, and the amount for the truck was $38,500 debit. So that's the balance that I'm going to carry over, $38,500. Okay, and then I'm going to go back into my journal and I'm going to enter account number 18 for the truck. Okay, account number 18 for the truck. Okay. The next account that we have is how many? Oh, we still have quite a bit to go. We have notes payable. Okay, so we're going to look for notes payable. Okay, notes payable happened on November the 8th as well. And let me look for another number, another color, maybe that purple one. Okay, so we have notes payable of $33,500, and we only have one entry. So we're going to go down and we're going to do notes payable. Notes payable happened on the 8th. That is journal page 1. And the amount of the transaction for my notes payable was a credit of $33,500. Okay? So if you look at notes payable, okay? Notes payable is a liability, okay? So a credit increases it, a debit decreases it, okay? So, sorry about that. Okay. So a credit increases it, okay? A debit decreases it. And where am I getting that from? From right here. Liabilities, debit decrease, credit increase. Okay. So I just copy it right here. That way we know. So that way we know that what does a debit do? A debit decreases, a credit increases. Okay. So my notes payable increased by $33,500. Okay. And remember, it's on the credit column. Okay. And I'm going to go back to my journal and I'm going to enter an account number 21 for that transaction. Okay. 21. Okay. Next we have accounts payable. So we have to go back and we have to look at our accounts payable. Okay. So I have accounts payable here of 15,000. We have 1, we have 2, and we have 3 accounts payable. Okay, so you locate the 3 accounts and then you're going to enter them into your ledger. Now for purposes of not scrolling up and down, I'm just going to enter the 3 transactions. Okay, so it's November the 6th and we had journal 1 and we had a credit of 15,000. So my balance is a credit of 15,000. Now accounts payable is also a liability, so this is going to apply to a liability. Okay. So accounts payable is a liability right here. So a debit decreases, a credit increases. Okay, which is what I have here. Debit decrease, credit increase. Okay. So that happened on the 6th, and then on the 24th, we had journal 1 as well. For that one, we had another credit of $12.50. Okay, because I have a credit of 15,000 right here. I have a starting balance of 15,000 credit. I have another credit. That means I'm going to add another $12.50. My balance is now 16,250 credit. Okay, and then last but not least, on the 30th, we had journal 2. And we had a debit of 3,000. Okay. So because we have a debit, we're going to subtract from our balance. So we had 16,000. Sorry about that. 16,250 minus 3,000. That'll be 13,250 credit balance. Okay. So I am getting my balance. I have a balance on my credit side of 16,250. I am going to subtract my debit of 3,000. So now my balance is a credit of 13,250. Now I'm going to go back to my journal and I'm going to enter an account number 22 on all of my accounts payable transactions. Okay. So it'll be a 22 here. It'll be a 22 here. And it'll be a 22 there. Okay. Okay, the next one we have is common stock. Okay. So we're going to go look for our common stock. Okay, and my common stock is right there. Let me do another color because that one is okay. So I have a common stock of 50,000, and we only have one entry to common stock, and that happened on the 1st. Okay? So we have common stock that happened on the 1st, that happened on journal 1, and we had a common stock entry for $50,000 credit. So that is the balance that I'm going to have. I have a credit here, so I need to carry my balance over here as a credit. Okay? And then I need to go back and I need to post my number 31 back in my journal right here. Don't forget this step because a lot of points will be deducted if you don't enter your account numbers on your post reference column. Okay. The next account that we have is dividends. So we need to go find our dividends. Okay. And we have dividends right there. Okay. So I have dividends of $2,500. Okay. Dividends. This is happening November the 30th. And that happened on journal 2. And I have my dividends of $2,500. Okay. Debit balance. So if you look at your dividends account, dividends debit increase, credit decrease. So that you can put here debit increase, credit decrease for dividends. So that's what you're doing. Okay. Okay. So all I'm doing is bringing the information from my map over here, from my rules of debits and credits over to my ledgers. That way I know if a debit needs to increase or decrease. Okay. And then I need to go back and I need to enter account number 33 on my dividends account. Okay. That was 33. Okay. So we're going to continue doing this for all of them. Okay. Fees earned. We're going to go back and we're going to look for fees earned. And we have fees earned. We have 2 transactions. Okay, we have fees earned of $11,500. And then we have fees earned of $22,300. So we have 2 entries for fees earned. Okay. So fees earned happened on the 12th, the first one. And that was for journal page 1. And I had a credit of $11,500. So I'm going to transfer over my $11,500. And then I had on the 23rd, which was my journal 1 as well, I had another credit of $22,300. So now let's look at fees earned. Fees earned is a revenue account. So for revenue accounts, debits decrease, credit increase. So for this account, debit decrease, credit increase. Okay. So I like to put them here that way I don't forget. Okay. That way I know what I'm doing. If I have multiple entries, I know whether I need to add or subtract. Okay. So here I have a credit of $11,500. And then you have another credit of $22,300. So what do I do if I have another credit? Well, I need to add it. So it'll be $22,300. So my total will be $33,800. So we need to do a lot of practice on this, on how to transfer information from your journal to your ledger, and be very careful when you're doing it. Make sure that you post it on the correct columns. Okay. Then we have to go back to fees earned and enter account number 41 in our journal. Okay. So we're going to enter account number 41 right there. Okay. Excuse my messages down here. Okay. So we've already used fees earned. Okay. What else do we have? We have wages expense. Okay. So how many entries do we have for wages expense? We need to go back to our journal. And we have 1 entry for wages expense. Okay. And that 1 entry, oh, that's too dark. Okay. Let's use that one. Okay. Well, that's very similar. More colors. Let me use So complicated. There we go. Wages expense. Okay, so we have one entry for wages expense of $6,800. Okay, so let's enter that entry in wages expense. That happened on the 30th. That happened on journal page 2. Okay, and we had, anytime you have an expense, it's going to be a debit, and we had wages expense for $6,800. So for debits, whenever you have a debit, you increase. Whenever you have a credit, you decrease. Okay, that applies for all of your debits and credits. Okay, so for any expense, that's what you're going to be doing. Okay, for any account that is an expense, that's what you're going to be doing. I'm just going to copy them over here. That way it's easier. I don't have to worry about it. There we go. Okay, they're all expense accounts, and for the expense accounts, you look at your map here. Debits increase, credits decrease. So that's what I did here. Okay, so going back to your wages expense, you have a debit of $6,800. So I need to go back into my journal and I need to enter account number 51. Okay, right here. Never forget this step. Okay, the next one we have is rent expense. So we need to look for rent expense. So rent expense happened on November the 1st. Okay, so November the 1st, we have rent expense of $4,000. Okay, rent expense. So let's go down and let's fill that out. We're almost done with transferring the information. So rent expense happened on November the 1st. That happened on journal page 1. And we had a debit of $4,000. Okay, so that's done. Now I need to go back and enter account number 53 on my journal. Okay, there we go. The next account we have is utilities expense. Okay, so we need to look for utilities expense, and that happened on the 29th. Okay, and we have utilities expense of $4,500. Okay, so we're going to go down and we're going to enter utilities expense where it belongs. Yay, we're almost done. Oh, sorry. Yeah, that happened on the 29th, and that happened on journal page 2. And we have our utilities expense, $4,500 debit, so we just transfer the balance over. If you had multiple utilities expense and they're all debits, you would just keep on adding them and keeping the balance here. Okay, and then we need to go back to utilities expense and enter account number 54. The next account that we have is truck expense. Okay, so truck expense happened on the 24th. Okay, so truck expense happened on the 24th for $1,250. Okay, so we're going to go down to truck expense, and that happened on the 24th. That happened on journal page 1, and I had a debit of $1,250. It's an expense account, so the balance should be a debit always, most of the time. Okay, so here we go, and then we go back and we enter account number 55 on truck expense. Number 55. Okay. The last item we have is miscellaneous expense, which is what we have right here. Okay. And for that one, what color? So many colors to choose from, but they all look the same. Okay, let's do that blue one. Okay, so we have miscellaneous expense of $1,000. Okay, $1,000. Miscellaneous expense on the 29th, a debit of $1,000. Okay, so we're going to go ahead and we're going to put it in there. That happened on the 29th. This is journal page 2. And we had $1,000 debit. Okay, And then I need to go back and I need to put account number 59 for my miscellaneous entry. Okay, number 59. Okay, so now I go back and I make sure that all of my journal entries have an account number. Okay, make sure that they've all been transferred over to the ledger, which they do. Now what we have is we have a general ledger for each account and the ending balance for each account. So that's your ending balance for each of your accounts, okay? So that is how much balance you're going to be reporting. Those numbers that I'm highlighting. If it was only one entry, then that's your balance, okay? That's your ending balance, okay? So we're going to be needing the ending balance for each of the accounts for the next part of the problem. I like to highlight my ending balance. That way I don't get confused as to what number am I picking up. Okay, I'm picking up the ending number. Okay, and make sure that when you are transferring the information, you always make sure whether it's a debit or a credit, because that will throw you off. Okay, so I'm highlighting all of my ending balances. Done. Now let's look at requirement 3. Says prepare an unadjusted trial balance for Heritage Designs as of November the 30th. Okay, so now we have to prepare an unadjusted trial balance, which we have down here. Now this is a piece of cake. They've already set it up for you here. You've got the name of the business, the unadjusted trial balance, and the period that you're doing it for, which is November 30th. The unadjusted trial balance, what it basically is, it's a summary of all of your accounts. So here you have all of your accounts listed in numerical order. They are always listed in numerical order. Each account has an account number designated to it, and you're going to put them in that specific order. You're going to transfer the accounts by order, so sequential order, okay, based on the number. So you're bringing all of the accounts, the account numbers, and then you have to enter the balance. So let's start with cash. Cash has a balance of $39,550 debit. Okay, so let's bring that over. $39,550 debit. Now let's go to accounts receivable. Okay, accounts receivable has a balance of $13,300 debit. So I'm going to enter that over here, $13,300 debit. Then I'm going to go to the next one. All I'm doing is going in order in which they're provided. Supplies has a debit of $1,750. Okay, $1,750. I'm just bringing in the ending balance from each account. The next account that I have is Prepaid Insurance for $2,400 debit. Prepaid Insurance, $2,400 debit. The next one we have is Equipment for $15,000. That's account number 16. $15,000 debit. Okay, so account number 16 is $15,000. Okay, so you just keep on bringing your balance. Okay, now the next account that we have after 16, which was our equipment, is 18, which is our truck. And our truck is $38,500 debit. $38,500 debit. Okay, so I've got my truck. Then here we have to be very careful. We are jumping. All of these accounts started with a 1. Okay, we had 11, 12, 13, 14, 16, and 18. The 1 represents your assets. Okay. Well, I'm not going to type. I'm having issues typing there. But 1 equals assets. Okay. 1 equals your assets. So, now we're going to move on to the 2's. Okay. The 2's are your liabilities. Okay. So you have 2 liabilities. Now, let's look at notes payable. You have a credit balance of $33,500. So make sure that you transfer it as a credit. Okay. Why am I going over here? Okay, so we have notes payable of $33,500 credit. Okay, and then we have accounts payable credit of $13,250. Accounts payable $13,250 credit. The next one we have is common stock. Okay, common stock, 50,000 credits. Okay. Then we have dividends. Okay, dividends, 2,500 debit. So all I'm doing is bringing the ending balance from each account. Next we have fees earned. Okay, fees earned, we have 33,800 credit. 33,800 credit. Okay. Then we go to wages expense. Wages expense is 6,800 debit. Then we have rent expense, 4,000 debit. So rent expense is 4,000 debit. Then we have utilities expense, 4,500 debit. Then we have truck expense, 1,250 debit. And then last but not least, we have miscellaneous expense, 1,000 debit. Okay. So what I've done, or what we've done here, is we've transferred the ending balance from each of your general ledgers into your unadjusted trial balance. So you're just picking up the ending balance on each of your accounts, okay? And then you're transferring it over and creating this report, which is a summary with all of the ending balances in all of your accounts. Now we need to add all of our debits and we need to add all of our credits. This is accounting. We always need to balance, okay? So you add all of your debits and then you add all of your credits, and they need to equal, okay? If they do not equal, then you made a mistake somewhere and you need to go and figure out what it is and fix it. You cannot leave it unbalanced. In accounting, you always need to balance. So you need to figure out where you went wrong. Maybe you entered an incorrect amount or you entered it in the wrong column. You need to go back and review your work. The debit column needs to always equal the credit column. So this unadjusted trial balance is once again a summary of all of your accounts and their respective balances as of the period stated. Okay, so that's requirement 3. Requirement 4. Determine the excess of revenues over expenses for November. Okay, so now I have my report here. So they're telling you basically to calculate your net income. What's the excess of your revenue over your expenses? Well, my revenue is fees earned, my account number 41. Okay, that's my revenue. And all of these are my expenses. Okay, I've got wages expense, rent expense, utilities expense, truck expense, and miscellaneous expense. So what I'm going to do is I'm going to get my revenue, which is $33,800. I'm going to subtract the $6,800 for my wages. I'm going to subtract $4,000 for my rent, $4,500 for my utilities, $1,250 for my truck expense, and $1,000 for my truck. Okay. Now I'm going to get a calculator and I'm going to do that. I just put it out here so you know what I'm doing. So I'm just getting my revenues minus my expenses. Okay. So it'll be 33,800 minus 6,800 minus 4,000 minus 4,500 minus 1,250 minus 1,000. That's going to give me 16,250. Okay. So that is the excess. This is basically your net income. Okay. Revenue minus expenses gives you your net income. That's calculated on your income statement. Okay. The excess of revenues over expenses. Okay. And then last but not least, what are they asking? Can you think of any reason why the amount determined in number 4 might not be net income for November? Okay, so let's look at, so they're telling you what could have caused this number to differ. Okay, so we look at the information here on the trial balance because this is a summary. So we like to use summaries to analyze. So we need to look at our summary and we can say, well, what could have changed that would have an impact on my net income for the month? Okay, Well, I look at my transactions, okay, cash, accounts receivable, supplies, prepaid insurance, okay, everything looks good. Now, I can foresee what's going to happen because I know how to do adjustments, okay, so I can easily pinpoint what can be impacted, okay. That's going to be taught in next chapter, adjustments, okay. But usually, like looking at this report, you look at supplies of $17.50. So at the beginning of the month, you bought supplies of $17.50. And if you notice down here, you don't have any account called supplies expense, okay? Usually we have an expense account for supplies, which represents the supplies that have been used during the month. So let's say you bought $1,750 of supplies and maybe you used $300 of it this month, okay? So those $300 of supplies that you used, you have to do an adjusting entry at the end of the month. Looking from this report, I don't see any adjustments, so we're missing that adjustment that could potentially impact my net income. So your answer here could be, some supplies may have been used during November, but no supplies expense has been recorded. So we are missing to do an adjustment for the supplies because we did have supplies, but more than likely we used some of those supplies during the month. So we need to do that adjustment to record the expense, which is the portion of supplies that we used, okay? So that is what you could have put there in your description. Adjustments are going to be covered in Chapter 3, and we'll go over that in a lot of detail in Chapter 3. For now, for Chapter 2, make sure that you always go back and that you are very comfortable when you're recording transactions and understanding whether you need to debit or credit an account. You need to know whether the transaction that you have in front of you affects what type of an account. Is it an asset, a liability, stockholders equity, revenue, dividends, or expense account? So you need to be able to say, okay, this account is affecting accounts payable. Okay, accounts payable is what kind of an account? Well, accounts payable is a liability. Okay, I am paying my utilities expense. What kind of an account is utilities expense? Well, it's an expense account. How are you paying for your utilities? With cash. Cash is an asset account. Knowing how to read this is super important. Okay, reading the chapter is super important because it gives you so many different examples of journal entries. It gives you step by step on how to transfer information from your journal, which we've been practicing during this lecture, transferring information from your journal to the respective ledgers. You need to master this. You need to be able to transfer information from the journal to the ledger. You need to be able, after you've completed or updated all of your ledgers, you need to be able to prepare a trial balance, an unadjusted trial balance, and the debits need to equal the credits. Okay? I've given you a couple of problems in Cengage to practice. Remember, you have 2 attempts for your homework. You have 2 attempts for your quiz. The quiz is terminology based. They're timed. You have 60 minutes. The homework, you can take as long as you want on your homework. You can save your work and resume at a later point in time. Make sure that you complete all of your problems because once the assignment closes, the solutions to both the homework and the quizzes will be made available, and only those students that completed the assignment will have access to the solutions. So it's very important that you complete all of your assignments, not only to earn points, but to make sure that you are understanding the concepts being taught in the chapter. If for whatever reason you have any questions after you have read the chapter, after you have reviewed the PowerPoints, after you have listened to my lecture, you have any questions, please contact me during my office hours. Remember, the best way to communicate with me is through Blackboard messages. If my office hours do not work with you, and you want to schedule something outside of my office hours, please contact me. Or if you have a question, you're working something out, send me your work so I can review it. Send me your questions. I'll look over it and I can guide you as to what you're doing right, what you're doing wrong, and how to fix it, okay? But in order for me to provide you feedback, I need to see your work, okay? I need to see what you're doing. what usually students do is they're working out the problems like on a piece of paper. They send me a picture and I see the work, or you can just type it out on an email or whatever, or on a Blackboard message and send it to me. That way I have information so I can see what you're doing and I can be able to provide feedback. Okay? If you are having issues with Chapter 2, do not be shy. Speak up. I am here to help you and provide you as much support as I can. You will not understand Chapter 3 if you did not get Chapter 2. So it is imperative that you read Chapter 2, you attempt the problems, and if you have questions, you reach out to me. So that is it for this lecture. I want to wish you the best of luck on your assignments, and stay safe, and until next time.